Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, we got Rugpull yesterday, I guess. When I was watching that press conference, I was like, okay, this all seems to be like what Powell normally says. Nothing too far out of line. There was one comment he said when it was like, we're not even close to thinking about pausing. And I'm like, well, isn't March kind of close? Because that's what the market has been pricing in. But otherwise, I thought it was kind of just a run-of-the-mill thing. But the market has reacted extremely adversely to that press conference yesterday, and it's become like the biggest FOMC day downturn ever. So I am very caught off guard here. I'm just like, am I that off kilter with the market? I think that my understanding of the fundamentals is very good, and that the market is just maybe overreacting a little bit, but I don't want to be trading against them if they're going to do that, right? How far are they going to go? So let's come over here and look at the charts and show you the damage. If I can find my volume profile chart. There it is. So here you see there was a big spike on the news and then a big spike afterwards. And now overnight, another little drop. And we are now at 4.17 in the 10-year. So are they saying like terminal rates, it's no longer 5%, it's like 5.25 or 5.5? I mean, that's kind of what it's feeling like they're saying, or they're starting to price. Here's the S&P 500. Big spike, huge downturn. I mean, it's really a big downturn, and then a little bit further down overnight. So things continuing overnight, I find it a little concerning. Gold and silver just pummels. Kappa getting hit. What about the Bitcoins? Well, Bitcoin got hit too, but like not. Bitcoin continues to show less volatility than it probably should, especially when we're seeing downside trades. And then we got Bitcoin. Sorry, the dollar. Man, am I off today? The dollar way back up there at 112.5 again. Now, this morning we are having press conference from the Bank of England. I'm not going to pull that up. Joseph Wang followed me. Sweet. I'll message him afterwards. Well, man, it's so difficult for me. So we got news coming up, of course. That's so let's take this one step at a time. Okay. I'm still reeling from yesterday, man. This was such a surprise to me. I mean, like straight up, I got rug pulled. Like I thought that statement was like the most dovish thing I could have expected out of the current Fed. And the market just really didn't like what Powell said. Okay, so anyways, we are going to be getting the unemployment claims here in a bit. So we're looking for 220 versus a previous of 270. I actually think we might be a little bit higher than that. So the thing that concerns me here is we're getting a lot of signs that the labor market is hotter than we would like. Like that's what we're seeing in job openings. I'm not very confident in that measure. I don't think that measure can tell me a whole lot about some of the other measures. But then we also had like ADP yesterday, right? And that was fairly okay. Now we're going to get unemployment claims. Like all of the tea leaves are in one direction. It kind of suggests that the labor market is hot. But then at the same time, when I look at what's going on in the actual economy, I'm seeing a really big deflationary impulse coming into the market. Like the tech company earnings, those were so dismal. How can that's got to be showing up in employment? If not this, if not in this report, it's definitely going to come through in December. And are we going to be to the point where we're actually getting negative numbers in December? That's kind of what I'm worried about. So everything here from market sentiment is just like very grossly negative. And then I look at some of these other things going on in the market, and it looks to me like this cycle is over. Like, I don't think that the current estimates are off, like 50 basis points in December, 25 in January, 25 in March. But to see further hiking after that, very skeptical. I'm very skeptical. And if the market starts to price that in, I'm just going to be like, wow. But here we go. We can get the news. Let's get the news. Let's see how they go. And then I'm actually a little bit behind today, so I'll have some food, right? We got 20 seconds here. Okay, so initial jobless claims actually a little bit less than expected at 217. So there's another jobs kind of tea leaf, and it's good. I guess it wouldn't be the only time I've seen it where all of the tea leaves kind of suggested that employment was better than expected, and then we were actually surprised, and it was actually really bad. So I'm not gonna like completely consign to that, like Friday is gonna be like a dumpster fire, but like, come on, got stuff going. It's gonna be interesting, man. So market's not really reacting to any of this. It does look like the treasury market is kind of hinting at a little move up. Another thing I need to point out is that there was a pretty consistent sell in the 10-year, both yesterday and today. I think that there might be some larger players in here. So that's the thing that I'm going to be watching for is we'll see if there's some sort of a meta order out there, right? Uzi, good morrow. It is a morrow, not a morning, isn't it? The song is a little too happy, but I'm gonna leave it. I went out cleaning houses yesterday. It's fun talking to rich people about finance stuff. They look at me like, are you my plumber? Dude, here's what we need to do, man. We both need to pass the Series 65 exam. We register with the SEC and become a federal covered investment advisor. And then we give investment advice to people online. That's the ticket. I kind of want to do something like that. Not sure I could do it all by myself. One of you guys here on the stream want to go and become an investment advisor. Because like when I'm looking through it, I'm like, oh, we know some stuff. We're actually a lot more capable at some of these sorts of things than I think we realize. But the other side of it, oh man. So this reminds me of a video that I saw yesterday. That's big boy stuff, and I'm just a lowly douche. I'm telling you, man, you could do it. You could totally do it. You'd probably be really good at it too. And having that, lowly douche touch, I think can really benefit you there. Wow, they're pushing down here, man. Did they not like something that the Bank of England just said there? So like I saw this video yesterday where somebody that provides a lot of news on TikTok was reading a story from, I think, CNN, and CNN was like, well, they just raised interest rates 75 basis points again. Here's what you can do with your investments. Well, you can buy up to $10,000 of what I forget what the inflation protected treasuries are that give you where the interest rate is based on CPI. Buy $10,000 of that, and probably don't want to touch your 401k, but here's some other places where you can kind of do stuff. And the creator was offended that CNN was creating this sort of article. They were like, you're so out of touch, CNN, if you think that we can spend $10,000 on bonds. And I'm just like, well, you're not the target audience, guys. Okay. Most millennials, yeah, you can't put $10,000 into something, but people that are 50 and 60, they can. And they have to start thinking about these sorts of things. It's actually like really crazy how quickly, I think the thing that always catches people off guard is how quickly you have to go from, well, you just always put everything in your 401k in an index fund, and that's all you really need to worry about. Two, there's all of this complicated stuff that you got to do to protect your gains from taxes and, protect your gains from a large market crash just before your retirement. And it comes up really quickly. It's like all of a sudden, it's like it doesn't matter. And then all of a sudden, it's like everything, right? I don't think that millennials are prepared for like how dramatic of a change. And what's going to happen to most millennials is when that change happens, they're going to realize like, oh, I am so crazy underinvested, right? And I think you can be surprised if you go to SDC USA and get like their Series 65 test. I think you're going to be surprised how much of the stuff in there you already know. I think you're going to be really surprised. I was surprised. Like, I don't know, like, all of the little rules and, like, the times and the names of all of the forms and stuff. That's a really big part of it. But, like, all of the macroeconomic stuff and, like, what kind of securities are out there to invest and all that stuff. I knew a lot of that stuff. So I'm going to do it. I keep every weekend, I take one of those tests. I'm going to do it. And then once we get it, I'm going to get it. Then we decide where we go from there. Do I become a registered investment advisor representative? Do I start my own investment advisor firm? I guess we'll see. Tell me this. If we started something, let's say that we started an investment advisor, or we started a fund. We started our own hedge fund, CTA fund, something like that, right? What would we call it? Have any ideas for names? By the way, good morning, Omar. Let me finish eating my food here. That was a little bit of an aggressive move down, but they are retracing it. Ali Khalil, welcome to the stream. You know what? That sounds like a Middle Eastern name. That sounds like a pretty boss name, to be honest with you. I like that. Ali Khalil. Bahrain. So, do you know a whole lot about the investment rules, particularly as they pertain to futures in your country? Because I know that in a lot of those, so for instance, we have a couple of people from Morocco, and the rules around futures and stuff are like really strict. Kind of prevents them from doing a lot of things. And you know, I probably need to get my relative volume measures up, but it seems to me like things are still relatively light in the volume in the treasuries here this morning. I wouldn't say like unusually light. It's just kind of like a standard morning without significant economic news coming through here. They may be reacting to the things that the Bank of England's Governor Bailey is saying at the moment. But they moved down and back up. We got a big order there at 21. See how this, I mean, I don't know. Maybe it's all splitting hairs because like we opened up at like the overnight lows. So like a little push further. And even if we came back to like 24.5, that would still be like just within the range. So Oh, what's this on the Zero Hedge front page right now? Russia to present quote unquote evidence that the UK special forces were behind the Nord Stream sabotage attack. Well, that's going to be interesting. So Zero Hedge's story is Bank of England hikes rates by the most in 30 years and pushes back against hawkish market expectations. Brannigan Barrett. One line really stuck out yesterday from Powell, which I have yet to read about today. Powell told us that it is more costly to have rampant inflation than it is to have the alternative recession because runaway inflation is hard to control without drastic action, and the Fed has the instruments to easily and quickly solve the problem of a recession. This was an extremely important look into central bank's playbook. The Fed is committed to hiking until it breaks inflation because it believes there are other support measures it can provide in the event of a downturn, including both monetary and fiscal policy. This paints an interesting 6 to 12 month picture. So long as inflation is hot, the Fed will keep going. Right now, market believes a terminal rate of 5% will be needed, but after non-farms payroll Friday and CPI next week, the market may push the terminal rate even higher. After yesterday's decision, the Fed policy is now truly, quote, data dependent. And the Fed would rather deal with a recession than deal with uncontrolled inflation. That's from Brannigan Barrett. Okay, so done with the food. So on the whole thing that like we can, if we hike into a recession, like we can deal with that very easily. I don't think it's so simple. I think the problem that we have right now is that any kind of dovish shift. So if we go into a recession, right? And then the Federal Reserve turns the money printer on. The current conditions are as such that it would just turn inflationary extremely quickly again. So like, I think you run this risk of having this issue where it's like, things are too hot, create a recession, start easing, things get too hot again almost immediately. So then you have to create the recession again. And then when you do that, it like ends up being a really ugly one, right? It ends up being very damaging. I'm concerned about that, right? that it just seems like that it would not take much. Like when I look at the current market, I mean, I see a lot of problems. I really do. I kind of shifted at about the same time that we saw the change from when we got the suggestion of a change from the Wall Street Journal, like what, 2 weeks ago, and we've kind of been moving up. And ever since then, everything that I see in the economy has kind of been like, oh, we got some problems. We're gonna have a hard time if inflation continues. But then at the same time, it looks like the housing market is gonna be coming back. So I think that these next few CPI reports could be a lot more tame. So, I'm reading through Twitter. Well, that initial move that we saw there kind of made me think, oh no, are they like really pissed off by the Bank of England now too? But it looks like it's moderating. It kind of just seems a little directionless at the moment. There's a free thing that's new on live stream on phone next to start at 27. What's that? Man, my nose is just like really itchy this morning. Open the stream on your phone, you will see, I guess. I'll go to the YouTube. And I visit the stream. On iOS. You can do the create clip thing now. Is that what you're talking about? That's all I see. Says stream is free. I don't see that. But oh, it is, maybe you're seeing, I do see that little bit in there. I think that might have something to do with that. Now that all creators have access to like the monetization tools stuff, you can make it so that a stream is only available to subscribers. So I think that that's what it's saying. Yeah. So if we ever get to the point, like if you go and look at Matt's stream, Matt has like 1,000 viewers a day now, right? If I had been in Matt's position, I would be making the stream like followers only or something, you know? Yeah, there's also paid content like month. Yeah, exactly. Man, why does this my nose itches so much? I'm gonna try blowing it, see if that fixes it. Well, there's a decent little move to the upside there. Yeah, I really like the changes on YouTube, and it really reinforces my opinion that YouTube is the best platform for creators. Like, I was talking to my wife yesterday. I was like, because she hasn't been working, so I'm not making as much this year as I did last year because we had a baby and she's not working. So she would like to recover some of that income, right? And I'm like, well, there is one resource we have at our disposal that we're not making use of, and that is that we own the cutest dog in America. So, like, start making YouTube shorts about that. It's like, my feeling is like, for a channel of that nature, like of cute little dog, and the intention is to make money from it. Yeah, YouTube shorts would be the way to go, I think. You know? Because TikTok gets you the discoverability, but it doesn't tie in with VOD content. It's kind of like you'll go viral and you get a lot of followers, and then the algorithm ignores you. You don't get anything out of it when you build the audience over there. Whereas on YouTube, you have that VOD content, and you can make VOD content about certain things, you know? So that, like, more evergreen content, essentially. Can you show us your Jigsaw DOM settings, please? Well, sure, but I don't really have anything all that different. I still plan on making a video about this subject. Maybe I'll make it this weekend instead of the Ninja Trader one. I was kind of leaning towards making one about the Ninja Trader, but I think the Jigsaw stuff is probably more timely at the moment. But like the main parameters page, I don't really change much of anything. On ES, I do like to have momentum tails turned on, but like, I leave the update intervals and interval prints and all that stuff the same. I leave the clear trades timer interval the same to 2.5, right? And now the things that I would change though is like over here on this trading section. So like, reduce smart Q font is really, really useful. This one, I don't have this one on for my ZN because I kind of do funky things with it. But normally I would, like, if I go and I look at my 10-year one, close outstanding orders when position is closed. That is really valuable, as I can't tell you how many times I've done it once or twice, but I've spoken to many people where, you know, they got out of a position and then they forgot that they had some limit or stop order somewhere, and then it ended up putting them in a position, and you don't want that. So close outstanding orders when position is closed is really, really valuable. And then the other one that I think is really useful is if you come over here to the trade column, under appearance, trade column tab, show P&L and include closed P&L. That way, if you come in and you take like 2 contracts, and then you take sequential profits with the one contract, and maybe you do that multiple times, you'll see that reflected in the profits that it will show you over here in the order column. So that gives you a really good idea of, like, you know, where your break-even point is and all that sort of stuff. Yep, I saw Jigsaw added tick compression to the DOM on the newest update. Yeah, I should note that that's still in beta. I actually yesterday tried pulling up a chart, like a footprint chart, because somebody was saying that they thought that a certain level, it was like 38, 33 or something like that, was being defended. was like, well, I don't really see that, anywhere. I wanted to show them a footprint chart to show there wasn't absorption there, but it wouldn't pull up. So there it is still a beta. What are you saying here, Dr. Mumu? Oh, I saw on Financial Juice has a partner section. Gary and had your video, yeah. So for sites/platforms for trading, Financial Juice might have. Yeah, I mean it was there's TradingView and there's some other ones that are trying to do like trading specific streaming, but I didn't really get much out of them compared to YouTube. I downloaded it, but I didn't install it because it's in beta. I trade live, so I don't want to be in a beta environment. Yeah, I mean, for your trading on the DOM, I don't think that it's going to affect you. Really what it comes down to is they're making changes to the charts, and they know that there's still a lot of bugs to squash on it. So that's why they made it beta, but made it available to everyone. It will be interesting. Yeah, it will be interesting to see what the future of Twitter was. Do you see all of those tweets yesterday from Elon Musk, between Elon Musk and like AOC and all this? Like, so many influencers, frankly rich people, really peeved about that they would have to pay $8 for the blue check is a little weird to me. I just like, really? AOC, you can't afford to pay your primary social media platform for a blue check, because it gives you more discoverability and all these sorts of things. Man, they're moving. Did they not like? Did the Bank of England say something there again? We would expect mortgage rates to reflect the fall in the curve. No. They moved on something. It may have just been a stop run. I do see maybe a little bit of a hint of that. Like, the thing is that the volume is not too crazy yet. It's definitely an uptick in activity, but it's still pretty tame. Well, so here's when I think about Twitter. Okay, so I saw a TikTok the other day that like I really disagreed with. They're like, because Elon Musk is gonna fire like 50% of the Twitter engineers, right? And some people were like, well, that's fine, then just go and get a job somewhere else. I think it's gonna be harder for them to find a job somewhere else than people think. Like, yeah, there's a lot of job openings out there, but I don't think that those are all real. I think, for instance, there's two things about that particular report that I think could be deceptive, right? Number one is that I think that some companies are putting out jobs with job descriptions that are like really unrealistic, like on purpose, to say that they're hiring or whatever when they're really not. But then the other one is that because of the pandemic, companies are more interested than before in hiring remote workers, which means that you would go and post the same listing in multiple states now. So that could also account for a change in the number of job openings out there, right? And then on top of that, like, if you're Twitter, where are you going to go? Google, they're not hiring. Amazon, they're not hiring, right? These are all places they're going to be firing people. So it might not be as easy for them to get new jobs as they think. But then the other one that they said was like, well, there's going to be all these engineers. They know these quirky things about Twitter that that's how they keep Twitter up and running. Probably not, actually. Like, that's the way that it is in most companies. But Twitter, the whole thing with Twitter is that the actual functionality that they provide through the website itself to its users is very simple. And it really became about just building an infrastructure that's really highly scalable. And they have rebuilt the infrastructure at Twitter, I think three major times now. And they have a system that works really, really well. And So I don't think that there's really a whole lot of active development work going on that sort of a thing. The place that's going to suffer for Twitter is going to be data analytics. So everything that they go into to get the information out of Twitter so that they can serve it to people that pay for the data, right? That's the thing that's going to suffer. Man, this is still going. Look at that. Bank of England's Bailey says, we do think the market curve is too high. Well, that wouldn't explain a downturn at all. It is the top of the hour when you might see like some meta orders come in and like the equity guys kind of come in. Still, that's pretty... How did J-Pow mess up yesterday? He ruined some long hopes. So did you notice this whole thing where it was like one of the reporters said that the market was up because the reporter basically had old information, and like Powell was almost like visibly perturbed by that? Because like if the market is up after everything that I've said, that's pretty crazy. Because like here's the thing. So I saw a Joseph Wing, nobody signaled the Fed would pivot. You guys need to read beyond headlines. Nick Timoros's excellent article illustrated the debate within the Fed and also suggested that some favored continued big increases. In my opinion, this context is very helpful. Right. So I think that some people keep using this term pivot. I think that the Federal Reserve is unlikely to stop interest rate increases before next spring. Okay. We've got the winter ahead of us, all right? But the Federal Reserve has made a shift towards, well, we don't think that we need to raise interest rates like super fast anymore. So the question is now more about what the terminal rate ends up being and how long we keep it there is what matters to them now. That's what Powell said, right? So to expect a pivot, is that what it is? Is that people were expecting a pivot and they didn't get it? Nah, I don't think that that's it. But there was a shift. I think there was a significant shift there, and they put that statement in there. I think that's important. And I don't think that Powell's intention was to come in and create the largest stock market decline in FOMC history, you know? And I am, like I said, I'm a little surprised that the market has reacted to that as adversely as they have. I guess I could say I'm not super like alarmed by seeing the 10-year at 4.2, because we were at 4.2 like a week ago, right? So that's just kind of a skip. But you know, if I start seeing them say the terminal rate is 5.25 or the terminal rate is 5.5, now all of a sudden I'm like, okay, that's like a big change in expectations. What do we have in the economic data to justify that line of thinking? Because from everything that I'm seeing here, tech companies are being absolutely demolished. We're getting a very strong deflationary impulse coming into the economy here. People are really struggling and pulling back on spending dramatically because the inflation is so high and their jobs just don't pay for it. It's like everybody got a 10% pay cut, right? It's just like crazy. And then on top of all of that, you've got like the home prices is kind of like a lagged measure and suggests that the next few data points we should start to see it come back, right? So I where is the hawkish data going to come from? Well, I think that we could get it from this jobs, right? His jobs report in November, definitely, but then after that, I'm not seeing it. After that, I'm not seeing it, you know? So do we have the data to justify higher than 5%? I'm skeptical of that. And I think that some people read one comment from Powell yesterday, which, and this one is a big one to point out. Did I already talk about this or not? I don't recall. Well, anyways, I think that this is probably the biggest opportunity for informational asymmetry / inefficiency that we might have off of that FOMC meeting. And that is that Chairman Powell said something about, you know, that we have to raise, you know, that is probably going to be above our projections, essentially. So that would make you think, oh, okay, so we need to raise the terminal rate. Well, what that really was about is that the Federal Reserve had their dot plot in September, right? Every quarter they do the dot plot. And the dot plot in September was 4.6. The average was 4.6. Okay. And the market expectation has been 5%. So when Powell said we need to revise those terminal rates higher, what he's really saying is, yeah, there was a couple of members on the board that were like really off and wrong, and they're going to have to move their dot higher. So that's not necessarily like a raise in expectations. That's just coming in line with the market expectation of 5%, right? But a lot of people are not, you know, they're not the focused on the interest rates all the time. They're not focused on the Federal Reserve all the time. They probably don't realize, they probably don't have that context to understand that's what his comment was. I don't think that Chairman Powell's intention yesterday was to move market expectations of a terminal rate hike above 5%. Okay. Even though that seems to me to be what the market is acting like right now, right? I'm probably going into bear slumber this week. I think we might, you know, this next period is where we're going to get some of the best trades, right? I guess the thing that we have to think, and where I think I really got myself screwed up yesterday, because you know, I got a really good trade at first, and I could have taken profits on it at some point, right? It kind of sucks that I didn't do that, but this kind of market is still very illiquid, but also has some really big moves, and all, you know, like there's real information coming in the market and moving things around, right? So in that kind of a situation, trying to come in and, you know, get this trade and then like just hold it for all it's worth, especially if that trade is on the long side, doesn't seem to be working out, right? It seems to be more effective in this market to kind of look at where the asymmetry may lie, and then wait for something to come in and screw them up and take the reversal, right? That's kind of been the one that makes the most. So we need to just be patient and sit here and wait for that opportunity when things get flipped on its head, right? For instance, what if the jobs report on Friday is less than 200,000 jobs? That could happen, could come out that way, right? It could come out that way. I think that the tea leaves are not very encouraging. Tea leaves are not very encouraging, but we could come with a non-farms payroll like under 200,000, and that would just completely flip this thing, right? Like if non-farms come out at 200,000, this market is going to skyrocket back up out of here, right? And that's going to be an amazing trade. So I think we just got to be aware and wait for these sorts of situations instead of just falling in line with, oh, everything's so terrible. Because look, market's not very good at these FOMC things. They really aren't. I think that they always overreact almost every time they overreact to whatever the Fed meeting was. So we'll see. Powell was clear it doesn't end when they slow down raising rates. Well, okay, so this is another good point, Mr. Bond, which is like, okay, so if the Federal Reserve creates a recession and then they have to lower interest rates again to get the economy going, and then inflation comes roaring back, and so then they have to tamp back down on it really quickly, and you go back and forth on that. That's not a very good situation, right? So it would be much better that the Federal Reserve raises interest rates and it brings the economy back down to a reasonable level, and then they just keep interest rates there for a long time. And because what we really need to see, like, here's the thing, okay? Everybody took like a 10% pay cut, essentially, because everything's so much more expensive. In many cases, to me, it feels like more like 30%, okay? But yeah, it's just really bad. A recession doesn't solve that problem because the prices don't come back. So how do you deal with that? Well, it means that you're going to have a period where inflation, the price of goods, doesn't change very much, but wages do. That wages change in line with 2%, right? And if you're talking about like 2%, that's like 5 years to recover that on that, right? You know what I mean? And if the jobs, right, if the wages come up faster than that, then what do you got? You got the price wage spiral, right? I don't know what you do about all of that, but that's kind of a problem, right? So I'm looking here and I'm like, well, I think I should make more money. Yeah, but if I make more money, isn't that drive into inflation? Right? It's a real conundrum. How do you improve people's wages and get people into like a better position where we can have a strong economy again without there being inflation accompanied by it? I don't know how you do it. This is why dealing with strong inflation and especially a price wage spiral is so difficult to stop, right? I think I need some more water. I'm gonna go change my water. I'll be right back. During this season, people might have 2 jobs by now for seasonal stuff, maybe. So this is another one of my concerns, though. Like, this is where I think that all of the tea leaves suggest that the jobs report is going to be better than expected. But the one thing that I think can put a wrench in all of that is the seasonal adjustment. That the economy is not looking so hot. I don't think that they would be looking to hire very much. And so on a seasonally adjusted basis, it might not look very good. And especially, I'm especially concerned for December. Like I said, I think that a negative print in December is on the table here. Right. Gonna be interested in those stats, yeah, for sure. Well, they had that move lower. I'm not gonna say it was a huge move. I mean, relative to the volatility that we've had lately, it was not too big of a move. But they're sitting down there pretty fine, so doesn't look to me like anybody is coming in here being like, well, I want to reverse this, right? Oh, jeez. 87-year-old man killed in an explosion in Provo workshed on October 21st. Man. Police have finally identified. That's all crazy. Be careful how you store your gas, guys. This is not actually Joseph Wing, is it? It's Fed Guy 121. Oh, I got all excited. It's not him. It's a fake. Boo. I'm just realizing that. I was like scrolling over to my notifications. It said Joseph Swing value. Fed Guy 121. No, that's not him. He's Fed Guy 21. Account's already been restricted. Good. Good. I feel a little bitter about it. Got me all excited. The whole humanity direction. No, listen, guys. It pays more to be optimistic, guys. Happened to me yesterday. Got excited for 1 second. It pays to be optimistic, guys. It's so everything that I was saying there was not to be like super pessimistic about the economy and being like, this is gonna like really be like a real disaster, etc., etc., etc. It was really more to highlight the fact that we're in a bizarre situation that we really don't understand, right? It looks like inflation is going to come back. But what you do about everybody's wages being lower now, relatively speaking, I don't know how that plays out. And I'm not sure if the economists really know either. Right? But I think that we still have reasons to be optimistic. Like, for instance, we're seeing a really big shift in social media, and I'm hoping that in the end this shift ends up with some positive changes and ends up being good. Can only hope. I mean, listen, we've been wrong on that many times. You know, I thought that Facebook becoming popular and us having status updates on Facebook and everything was like a really good thing, and that was a real disaster, right? So, but the point is that it pays to be optimistic. It pays to be optimistic, and it pays to think long term, right? And yes, there's some concerns with inflation and the economy in the short term, but where does the S&P 500 go in the next 30 years? That's the time frame that we need to be, thinking about. 30 years. What's going to happen in 30 years, right? Yeah, where's the stimulus? We just bumped trillions into the economy over the last 2 years, and the S&P has almost given all those gains. Yeah. I mean, this is the issue with the whole quantitative easing sort of a thing, right? If you come in and you do a year of quantitative easing, and then you do a year of quantitative tightening, it doesn't actually accomplish anything, because the market just gives back all of those gains, right? Now, when you have like 10 years of quantitative easing, that helps the economy out, right? That helps you grow. But it introduces other problems that we're dealing with. So, listen, yeah, it's starting to look to me like it may take 5 years for the S&P 500 to reach new highs, especially on an inflation adjusted basis. I think you're right. I hope it's not a lost decade, but it may be a lost decade. Which is kind of like, I think it's just so ironic because I just see so many people that are like, buy the dip, just keep buying, you know, put all your money into the 401k and everything. Like, you don't need to worry about all this. And it's like, okay, so you just, when everybody became an expert in the passive investing way of doing things, you basically got everybody to get into that sort of thing at exactly the wrong time. People get so the end is nigh. We're a speck on a very long timeline. A lot of growth is happening. The chances of our generation ending it all is so low. There's, yeah. And I'm also hopeful because I think that one of the biggest stumbling blocks for our society here in the United States has been the role of globalization and moving supply chains overseas. And how do we do that in an appropriate way that doesn't hurt our own citizenry and doesn't help bad actors around the world? And the actions of China and Russia this year have basically solved that problem for us. It's basically like, oh yeah, we do need to have our own supply chains, and we do need to be careful about what kind of help we give, economic help we give to Russia and China from trading with them, etc., etc. Like the world is going through deglobalization. That problem was solved, and that's really useful for the American middle class. Let's hope that when we rebuild, that they're a little bit smarter and they say, hey, let's allocate more of those recovery funds to supply side issues and rebuild our industry here in the United States. So my new squawk, it was just pointing out something about the German bonds we're pushing. So, you know, we had a Bank of England discussion this morning, all of that. Maybe this bearish action that we're getting in our treasuries is more due to overseas than, like, you know, follow on action from yesterday's Fed meeting and everything. Read anti-fragile again. Yeah, well, there you go. Build back better. Yeah, let's actually build back. Let's actually build back better instead of build back more communist. Is that what they did? I don't know why I was thinking about this morning in the shower. I was thinking about, you know, there's a lot of people, they say, I consider myself a classical liberal. And then they vote like hardcore conservative Republican. Sorry, but I don't think you can call yourself a classical liberal if you're like really super into Donald Trump, for instance. Okay, like there's so a lot of liberalism, a lot like ideas were originated from France. Okay, there really is understanding France culture and everything. I think really helps you understand a lot of those ideas and stuff. Okay, and there's a lot more Javert to conservatives in the United States than there is Jean Valjean. Okay, they focus more on law and order, right, than anything else, right? And yeah, I got on a tangent and then I forgot what my point on the tangent was. It looks like that the rates are coming back here now pretty aggressively, though. We're coming back to the open. You seem educated in macroeconomics, Lanny. Learn. I wish that, man, this question gets asked a lot, and I wish I had a better answer to it, because I think the reality is that I learned so much about macroeconomics from watching CNBC for years and watching the market for years and reading news articles for years. And I'm not sure if there is a singular book that I can go out and give you that would really teach you everything that you need to know. I'm working on some content that should help out, but it's difficult. French also had the guillotine. There you go. Anyways, so I was just thinking, like, I think that some people, they want to fashion themselves as a classical liberal just to be different. You know what I mean? But the whole thing that really helps our economy, what helps the United States continue to be so effective, is that it is very much decentralized, right? You don't have one side like that can really just completely dominate things. And if there's anything that I think has hurt our country in the last 10 years, it's that liberals aren't liberals anymore. It's like they got taken over, or they disappeared. And now they're Maoists. Like, Democrats aren't classical liberals anymore. They're Maoists. There's conservatives claiming to be classical liberals. I don't think that they actually are, right? The problem is that the classical liberals turned into Maoists, right? And I don't think that there's, you know, I don't think it's a coincidence that a lot of the policies that I see Democrats pushing happen to be just exactly what China wants, you know? Just saying. That's where I was going with that. So we want a system that's anti-fragile, and that means we need different types of people, different kinds of, you know, mental proclivities. Think about things in a bunch of different kinds of ways. There's been a lot of people that they just want everybody to think the same way. That's not what you need. That's not anti-fragile. Scanning around on Twitter here. Nassim Taleb has been arguing a lot about vaccines and stuff lately, and I just don't really have a whole lot of interest in the subject. You know, like, there's been a couple of stories lately about, like, that the vaccines weren't as effective as they said that they were, that a lot of people, you know, it still got spread, and there was a couple of other things. You know, I think that the biggest one was that they said that the vaccine prevents you from spreading it, and that wasn't true, basically. But so that's out there, and I'm even seeing mainstream news outlets report on it, but it seems to me that people just aren't interested in that. I guess when you got inflation running hot, it's kind of hard to worry too much about what they got wrong with COVID policy, because people are too busy dealing with the current problem. S&P 500 opening down here. Oil not looking so hot. Oh, dude, Uzi. Ugh, you shouldn't have brought that one up. That is, yeah, I've seen that stuff. So there's been, and I'm not seeing this on any mainstream outlets, but I am seeing enough information about it to verify that, like, these instances have happened. How widespread it is, who knows? But basically, like some funeral directors, when they're embalming people, end up finding like these big gelatinous like masses in people's blood veins. It's like they're like giant blood clots or something. They're just these big white blood clots, and it's like you could go by find the videos, but they're really disgusting. And they're by people that aren't on YouTube. Like I don't think that it's like you're not allowed to talk about it on YouTube, but maybe if you make some conspiracy theory up about what's causing it, then you might have problems. I don't know what's causing it. It's really bizarre. And it's really bizarre that you're not hearing more about that, because it is really interesting, isn't it, Uzi? Ultimately, none of it matters. They're clots, but don't have the consistency of clots, and they're white, and they have the consistency of a calamari. Oh, that's so gross. That's so gross. Well, we've come back down 2.5 basis points now from the highs. It's really disgusting. I wouldn't go and watch the videos about it unless you have a strong stomach. You know what's so funny? So my wife, she is always like, she'll watch shows that are like doing surgery on people. Like, you know, there are some reality TV shows where they like do surgery on people and follow them around and stuff. Or like there was this other show, it was like a scary show. Like, oh, I forget what it was called, but it was basically like a guy lives in a house and he's like being stalked by the neighbors, and the neighbors are like blood sucking, you know, rich people or something like that, you know, that want to scare children and then drink their blood to stay young, sort of a thing, right? So this is a show on Netflix. She's watching. I'm like, I don't want to watch this. She was like, no, this is an interesting show. It's like, no, it's kind of, I don't like the feelings that this show gives me. No, thank you. No, thank you. But and when I'm watching like surgeries, I was like, I don't like the way that makes me feel. Let's not watch that, right? She loves to watch that. But then here's the thing. She wanted to be a veterinarian. She wanted to be a veterinarian, and she got to school and she heard enough about being a veterinarian that she said, I don't think I want to do that because it's gross, and you start to treat animals as disposable. So she didn't want to be a veterinarian. Isn't that funny? Man, they just had like a really big spike up there, and it was accompanied by pretty decent volume in both the 10-year and the 30-year. And the price fell back down very easily. It was about 5,000 contracts too. The Watcher. It's a terrible show. You're not. Yeah, thanks. You know what I started watching? Oh my gosh, I love this thing so much. It's good. Spy X Family. It's an anime. Spy X Family. I love it so much. It's such a good show. Oh, this makes me want to trade it. I don't know. Do I really have? Oh, what's this? Somebody's speaking on CNBC there. Oh, I tried switching my account here. It did not like that. Oh. Symbol mapping not found. Interesting. So let me try something here. X22 instead of X2, I think. There we go. I'm gonna change that. It looks like that Rhythmic changed some of their symbols, so. They have both digits of the year in it now. That's interesting. Okay. Thank you for reminding me, Tobias. PMI news soon. We got services PMI at the top of the hour too. So I need to sit pat, watch what happens. Services is where the inflation is. 1000% on SpyX family. It's really like, I think it's like just the perfect show for me because number one, they're talking about all of this like international intrigue kind of stuff, you know. It's like the prime minister over here doesn't have hair. That like that's just my kind of thing. Like I'm just into that kind of news based stuff, right? So I like it because of that. But then it's just so positive. So positive. I like that. They say it takes 10,000 hours to master a subject. I'm understanding with capital markets, 10,000 hours may just be applied to the one market or style of trading. Yeah. You're using. Look, they're up there at the highs. Something's happening. Like I said, it would still be like, we'd still need to get above 24 to be outside of the range. There's actually probably going to be some people looking to go short here, so. And I think those PMIs might suggest some inflation, right? What is this? Oh, the movement on the upside has definitely been more aggressive than anything else I've seen this morning, and the volume continues to come in as well. White House Chief of Staff claim data shows that the U.S. economy is strong. Don't say that. That's not helpful. Things are really bad, folks. It's really bad out there. It's such an awful recession. We just... Oh boy, Goldman Sachs seeks to do in order to expand crypto. What is the cryptocurrency? They're moving up. That might be a buy for Bitcoin, man. Let's wait here, see what the exact story is. Is it true the election helper have work being bulletproof glass this time? Yeah, I don't know. Do I look like I work for the Secret Service? Actually, maybe I do. I'm bald. Just because I'm bald doesn't mean I work for the Secret Service, Tobias. Okay. The headline is Goldman Sachs is attempting to impose order on the rapidly expanding crypto. Is what the headline is. So does that mean that they think that the space is disorganized and they're trying to, like, you know, organize things? I still think that's a good story for Bitcoin. But I'm really interested in what's driving this buying in the treasuries. Okay, so it was a CNBC story. Okay, Goldman Sachs is set to unveil a data service created with global index provider MSCI in crypto data form Coinmetrics that seeks to classify hundreds of digital coins and tokens so institutional investors can make sense of the new asset class. Oh, I use Coinmetrics for some of my metrics. I hope that they don't change anything. The new service is called Datonomy. They play on the word taxonomy, which is the branch of science concerned with naming and classifying the natural world, and can be accessed as a subscription-based data feed or through Marquee, which is Goldman's digital storefront for institutional investors. So, Goldman Sachs is coming after CoinMarketCap. That's what the story is. I still think that's good for Bitcoin. Maybe mildly good, but I think good for Bitcoin. Okay, I'm detecting a little hint of pulling here for this news that we're supposed to get here. Services PMI. The services PMI estimate is 46.6, by the way. Don't bonds rise when stocks fall? The correlation changes. Okay, it's higher than forecast, so that's not good. So, okay, so the liquidity's come back. Wait, what? My DOM is a little screwed up here. It's not showing my position. Well, I don't like that. News is causing some selling, and I would say it was significant amount of volume as well. What? Price is holding here at 19.5. Okay. But okay, so I don't like that at all. Jigsaw, what are you doing? Maybe I need to get off the beta because it's okay, so I took one tick loss on that, but like look, I put the limit orders out and they just sit there. That's not. It thinks there's still a position on too. That's funny. Yeah, that's screwed up. Well, the S&P Services PMI did create a little bit of activity, but we got ISM coming in at the top of the hour, so. You think ES goes lower today? Is this position still in? Shit. Fuck. Oh, that pisses me off. It wasn't a bad loss, but that pisses me off so much. Yeah. No, I think that it was a problem with the Jigsaw beta. So I think I can make the error happen again without getting into a position here. So I have my account enabled here. If I put in an order at 4.157, I can see it increases the liquidity there. And then when I cancel, it goes away. Okay. So what happened was I got into a position and then it wasn't reflecting the position. So I clicked, I exited out. I saw the volume trade there. Now I'm coming over here and I'm looking at it in Rhythmic, and Rhythmic says that I never got out of it. So I lost $18 on that when it was only supposed to be $1. It makes me so mad. So I came over here into Rhythmic and just puked it through Rhythmic. That's what I did. So I just sit. You know, maybe I think I need a little bit of time to mourn that $20. It wasn't supposed to happen. I mean, I can take a loss, but when it's a mistake, or it's a platform mistake, that really irks me. This is kind of weird though, because it's not, yeah, it's not in any portion of the application that they changed. So I am wondering a little, like, how can that be related to the beta? Somebody took that 4.1166. I think that was a good trade right there, boy. Even though, you know, who knows if it plays out, but like in terms of catching the edge, that was great. Like It looks like they want rates to come back here, though. So, like, there's been a decent amount of selling here in the 10-year, but they continue to be at highs. That's interesting. I'm not seeing the dollar move, but I am seeing the Japanese yen move. I do kind of want to try it again just to see if I get into a position if I can recreate the bug now that I know what's going on, but I don't think that I want to do it just before the PMIs. So 2 days ago I was scared we would be reaching for 4,000. Yeah, it really shifts quickly, doesn't it? So I'm seeing a lot of things here in the S&P 500 that really contradict what I thought the situation was a few days ago, right? Because one of the things is that there wasn't as much gamma and so forth around this FOMC, which kind of suggests that, like, even if something bad happens, because people aren't protected, it can kind of limit, because there's not like the options to drive it. But they dropped 150 points and now we're almost another 100 points. You know, I don't think that they're hitting a key level or anything, but I am wondering if the Japanese are doing something again. Would make sense, because I mean that's what's happened the last 2 meetings, is that as soon as the meeting happens and then the Bank of Japan comes in and starts doing operations. So if we get good jobs data tomorrow, oh absolutely. Well, are we that close? Nah, that's too far. Well, in the S&P 500, the yearly low is like 3,500. So I think that would be a little bit too far, but midterm election, shouldn't this start going up shortly? I really think a lot of the conspiracy theories around how they manipulate the markets going into the midterms are not really turning out very well, right? Because again, like, the Democrats are getting screwed on every front. Man, I wanted to like flip around and go short, and they're just not backing off here, like even ahead of the news. Far more likely to get it in ES before you, okay, in the NQ before ES. It was kind of interesting how the S&P 500 like really bounced off of the 100-day moving average. We got above the 50 and then they got to the 100 and that's where they stopped. Okay, so I am noticing that the order flow has shifted a little bit since we pulled off of those highs in the 10-year. There's a little bit of absorption at 24 and then 2 ticks down. You could see here in the micro cell a couple of people taking some liquidity out. So I don't know like when we would get new yearly lows or anything like that, but definitely if the jobs numbers tomorrow are good, the market is going to be very unhappy. and I do kind of suspect that that's what has the market all up, is that the signs we're getting are that the jobs are going to be good. Unhappy. Yeah, they will be unhappy. The reason I'm presenting it like that is because I know that this isn't what Kevin means, but one might think that you could take the position of, oh, if it's bad, then that means the correct valuation on the S&P 500 is, X, right? But the markets are not informationally efficient. Markets don't price things in. It's just supply and demand, orders moving the market. So, okay, they're really pulling for this news. By the way, the services PMI estimate is 55.3. Got 10 seconds here. It is, they are preparing. I tell you that much. Oh. Okay, so it's less than expected. Prices paid is a little bit higher than expected. New orders is much less than expected, 56.5, not expected, but previous. U.S. core durable goods revised, coming in line with estimates at negative 0.5. So there was a pretty good pop off of that news for the PMIs being less than expected. Is 54.4 versus 55.3 really that big of a deal, though? I don't feel like it is. It's always amazing to see. That was quite a that was a much bigger pop than what I was expecting. I can say that much. Note though that the yields didn't really actually shift. Isn't PMI jobs the most important right now? Well, so, okay. So for services employment, they got 49.1, which is a contraction versus a previous reading of 53. Yeah, I didn't catch that one because that one they don't have a forecast for. That might be why they popped the way they did. Yeah. So did it again. Yeah. It got me into it filled the order, but the DOM is not reflecting my position. Wow. Okay, well, yields are looking a little sensitive here. So my thinking on this one, I don't know if the employment number being 49.1 is a huge deal or not, but I think that the timing of it and everything relative to the action that we've had is significant. Kind of creates a possibility for us to get a little bit of that inverse sine law. And there has been some buying moving up into it throughout the morning, so I think that that's kind of supportive. Like the big thing I was worried about coming into today was that it really felt to me like there was a long-term meta order sell on the market, and I'm not seeing signs of that in here today. Instead, what I'm seeing is the 6J is just pushing up really strongly. So far, though, not really moving, and there's a big order above us and the 5-year. Oh, they pushed through that pretty easily, though. Well, some of it pulled, apparently. They're reaching for new highs. They haven't quite gotten them yet, though. Yields kind of shifted there because the bonds are about where they were, but the yields are just a little bit lower. It looks like, though, they're having a little bit of a hard time pushing up more. And I am also detecting steepening coming into the curve, so the 30-year is lagging a little bit. Nope. The dollar has not reacted at all, it seems. Yeah, that's a good point. The 6J is definitely moving up. Although the 6J is pulling back a little bit at the moment, just a tad. But yeah, when I look at my dollar index here, the dollar has not actually shifted much. It's still just chilling in a range. Well, I'm not too fond of the liquidity at this moment. Like, the resting liquidity is the same as it's been all morning. Pretty crappy, but the latent liquidity has been a little bit like they let them pull back pretty hard there for a moment after they came off of the highs. And it seems like the offers have been a little bit more firm. Looks like the 30-year is coming back a little harder now, though. It's going to flatten more. Is it actually flattening? Is it shifting from steepening to flattening just like that? Action in the S&P 500 is curious. I mean, I've changed it now that we've got the tick compression thing turned on, so might take me a little bit to kind of learn how to deal with that in the ES and read that. But it looks like a strong uptrend coming into the S&P 500 here, right? Off of that news. Funny fact is the VIX yesterday was falling. Yeah. The options positioning in the last month has just been really bizarre, hasn't it? I think that a lot of it is probably an artifact of the there having been so much options activity before that, right? Like during the whole UK noise that we had, there was some pretty crazy things, right? So if I'm okay. I think as long as I can still place orders, I don't need to panic. Because I know where I got in at and everything, but so I am still seeing the volume in the 10-year come in long. The volume in the 5-year is looks long, but it's maybe a little bit mixed. And the 30 is maybe actually selling, despite having come down, by the way. So I'm not sure if what I'm seeing here in the tape is a real fight or if it's an artifact of the change in the spreads that we're seeing. See, that 30-year looks like it wants new highs. Okay. Whoa. Whoa, 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 whoa. 2,553 just traded at 25. And an iceberg there absorbed all of it quite easily. Okay, but then they traded back down through it. That's not like a bad sign, but that might be something that kind of keeps us stuck. Okay. Okay, so when I'm talking about a meta order, I'm talking about an order that's maybe like 50,000 contracts that's going to get executed over hours. You know, they're going to execute a small portion of it, and then they'll wait 45 minutes and execute another small portion of it, right? And some of these will take place over days. Like if the Japanese are coming in and selling a bunch of their bonds, they could be coming in and selling a little portion of it like every day for a week, right? That's a meta order. An iceberg order is a type of order that you can place on the CME exchange that doesn't put the whole order resting. So will only show a certain amount, and then when that certain amount is filled, it will automatically refresh and add more. I didn't like the way that iceberg played out, but they are pushing higher, so maybe I could have relaxed. I was a little nervous, so. That was a strong take right there on the highs. I'm still a little bit nervous about it. Like, you see that? That looks like that could come back. So I'm thinking about like why is broken, because yesterday I didn't have any problems, right? And I was using the beta. So this doesn't explain why I'm having a problem. But the thing that I changed was that I did come in and I like refreshed my instruments. So I think what I'm gonna do is I'm gonna come in here and do that again. But this time, instead of refreshing, I'm gonna like totally reload it. And just come in here and just do the CME and do reload. Okay. Nope, didn't change it. Why are you saying you don't like discretionary trading? I am just 16. Should I learn to trade? You should go to school, get a finance degree, and go and work for a bank if that interests you. That's real trading. Like what people do on day trading, you gotta understand what we do here on day trading is because we screwed up. It's because we didn't know that we could have gone and worked for a bank instead, right? So if you're 16, do really good in your math classes, man, and go work for a bank. Looks like there's some shifts to the long side. So when I'm looking at this move, so of course we had a pullback there. Okay, this is maybe a pullback. I don't know. But like we reached new highs without seeing a very strong change in cumulative delta. So that's kind of true. As much as I hate to admit it, it's good advice. I know, right? I mean, nobody wants to say it, but like the reality is that the retail trader is the kind of the misfit, right? What happened? Here's what happened. Like, here's the history of it. Is in the 80s, there like we had the rise of locals, and so there were people that were market making on the floor, and they were doing really, really well. And then we moved over to electronic markets, and that kind of destroyed the floor locals. And when that happened, we had another group of traders that kind of came to prominence that had found a couple of fun little tricks that you could do with electronic trading. And so all of the stuff that we hear about in like the early 2000s and so forth, you know, it was all based on those people. And then around 2008, robots came in and just wrecked those people. And ever since then, it's been like super hard to trade, right? So like what we're doing, we can't really take advantage of kind of like the scalp sort of setups like we would like, right? So it's like that. Meanwhile, things have just been getting better and better for the institutional traders and the banks and stuff. So especially if you can do like quant stuff. So if you're really good at math, you do calculus, you get into statistics, you can make so much money in that world. Okay. But nobody should be when they're in high school should be aspiring to be a day trader. Okay. 95% of retail day traders lose money, right? You have the chance to go and be a real trader. Go work for Goldman Sachs or the Federal Reserve Bank of New York and execute like the big trades where you don't really have to worry about whether things should move up or down or what trade you're going to make. They just tell you you need to buy X thousand of this and you do your work. That's a way better gig, man. It's a way better gig. If you're 16, that means you have the opportunity to do that, right? You've just got to say, I love math. Because math sucks, I know. But if you just say to yourself, math is hard for everybody, I'm going to decide that I love math. I'm going to focus on it. I'm not afraid to go to college and do majors that involve math. Man, world can be yours. Who's the good math? It's the best subject, hands down. It tells the truth. Most hate math because we simply don't know where to apply it. This is where it's applied. Yep. All of the really big money makers, math opens the world up to you for the big money makers. A lot of people will say, well, you know, the math is useless. You don't actually use it in your career. Well, most people don't. The reason they teach it in school is so that you have the opportunity to become an engineer or a guy in finance or the other fields that are heavy math, right? So that you have the opportunity when you go to college, because you kind of have to do it. Is you kind of have to build some basics when you're a kid. You can't just like turn 21 and then all of a sudden start learning geometry and stuff like that, right? So, but the real money makers are the ones that have math in it, right? Like the top careers, if you really think about it, it's going to be finance, engineer, doctor, lawyer, right? Those are the money-making professions. I do know the trap retail traders fall for it. My current goal is a degree in finance. I also have tons of knowledge about finance, banking, financial markets. Good. 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 Let the finance flow through you. I forgot about the whole Swedish flash crash. That one was weird, wasn't it? I mean, it was kind of like it was in a market that you know nobody here in the US ever thinks about, but it was like just to read about it was like kind of insane. I was like, this stuff can still happen? What? Oh, okay. Well, you know what? They breached new highs, but I don't like the way it's going. Like I said, I puked $10 there. So in the end, I should be down 10 today, but because of a trading level mistake, it was more than that. I don't know what to do about this here. I get engineer equals tech. Yes. Yes, it is. Despite what the Canadians would have you believe, computer developers are in fact engineers. And the Canadians should just give them a certification or something so that they can be called engineers. Because I think there's a good reason why the industry moved towards that terminology. You are engineering. It's not clerical work, it's engineering work. It's solving technical problems. So 25 was kind of where we saw that big iceberg and everything, right? So that's why it's like, okay, we developed the area, or we started to see signs of the area. They immediately pushed up, and now they've come back to the area again. I'm kind of leaning towards I would like to see more upside action, but I don't know if I can justify taking another trade given that situation. Like, that's something that could prove to be a barrier for the market for a little bit. I am seeing the Japanese yen continue to move, though. Yeah, okay. Hey, thanks for stopping by, Daredevil. I enjoyed speaking with you. Tough day. Tough day for me because of technical error. I don't know what to do, because so the issue is that I think it has to do with me changing the instrument. And so even if I downgrade, I don't think it'll solve my problem. See if I do the sim account. It's fine. So I wonder, I was having an issue yesterday. If I come back over here. Yeah, now dollar moved lower, didn't it? Good catch. If I try and load this ES chart over here. And let's try and make it a footprint. Well, that loaded really fast. Footprint. Okay. Look at him go. Well, it's not giving me the error message that it did yesterday, but it's still just kind of churning. Oh, and now it shows it to me. So the other thing that I'm thinking, what if I just switch this? I can make it a 2-year, and then I'll switch it back to a 10-year. And why? November. Oh, here's the oil report. Sorry, not oil, natural gas, right? Oil was yesterday. They pushed up there. It's coming back a little bit. That it looks to me like they're being tricksy. I'm not actually seeing like good auto-correlated volume come in or any of that. I should come in here and change a few settings. Do you think that the Fed doesn't want the market to go back higher too fast because it's in some way inflationary? Yes, it's kind of like that. Yes. So actually, I think that's pretty close to what the reality is. So there's something. There are a couple of market indicators out there that are provided by like JP Morgan and stuff called financial conditions index. So because the financial conditions are not created just by the interest rates. It also has to do with other things going on in the market too. So every time that the bond market comes in and says, oh, the Federal Reserve is going to pivot now, that's good, right? They'll immediately start pivoting and reduce the financial conditions, and that's inflationary. So the issue is that the Federal Reserve doesn't want the bond market to think that easier conditions are coming until they actually make the shift. So when they act, if they ever come into the point where they reduce interest rates, it's supposed to be a surprise to the markets, essentially. Right? Now, a shift to like interest rates being neutral should mean that they should be able to just keep interest rates where they are, right? I don't think that's been the way that it's been working out. That's where I'm saying, like, I always have a bias. I always have an opinion about what the market is doing, right? But I think the thing is that I think that we're fairly well priced at, around between 3.75 and 4.25 is fair, essentially. So, yeah, I do kind of feel like the Federal Reserve plays this game of like, well, the market did too well this month, so I guess we have to go and hammer it lower. Or no, we don't want to see them go that low. well, there's another little step lower there. Doesn't look like they want to give me 415. Like, I used to think, well, and I think that the Fed just has their message and they want to get their message out. And it seems like, sometimes the market doesn't get it. But when I was watching that press conference yesterday, it felt like, yeah, Powell wants the market to go lower today, and it's not. That sort of, so he's getting more aggressive. I am starting to think that, like, the messaging that they put out is, basically them trying to keep markets in a certain range, which suggests that we should be able to predict, right? Oh, I guess I don't really need to change the Smart Q font for this one. Oh, this looks so good. Yeah, true, but between the lines there was dovish line. Yeah, here's the thing that I think is like so crazy about all this, right? Is that the market read this as like super hawkish, but I feel that he didn't really say anything all that different from what he's been saying. Meanwhile, the thing that like really changed was the change in the statement, which was about as reasonably dovish as they could be given the current circumstances. And that was the thing that really changed, and that what frankly was surprising. Like, I expected there to be some sort of acknowledgement, moderation of this fact that we have lagging indicators, and that we have to think about now, how do we transition to increasing interest rates 75 basis points every month to not just leaving them where they are. But I did not expect it to be in the statement, right? That was a big surprise, right? So I just can't help but feel that the market was like overreacting to it all, right? Like, especially when you consider that all that really matters is the non-farms payroll on Friday, right? Like, this adverse reaction is silly unless you think you know what the jobs number is going to be and that it's going to be good, right? Because if that jobs number is bad, then this is going to come roaring back. And if that jobs number is bad, I mean, it's really going to come roaring back. It'll come back hard and strong, and it'll just blow your socks off. Maybe that's why it's not going to happen. But that's the setup. Okay, here they're stepping back up to the highs again. It looks like they might reach the 30-year is probably going to trade a new high. Oh, no, there's some more 300 stacked there at 03. It might take some time. They might come back, but I feel like they're a pretty good chance they're going to push higher. Hold back again. I suppose this is all a sign that it's just not good trading today in the treasuries. So they're being awfully tricksy here, right? It feels like that they really want new highs, but it's not really happening. It's kind of been a really, really slow uptrend the whole session, though. Like it's been moving up ever since for the last 90 minutes. It's been on the uptrend for the last 90 minutes, but it's just been really slow and gradual and not really accompanied by a very significant change in cumulative delta. So if there is somebody that's buying it, they're really good. Let's see, like trying to catch an as she goes trade right now, not working out very well. Also doesn't appear to be correlated with much of anything. This is my kind of song right here, yeah. It reflects the hidden inner anger that I'm harboring today towards the Federal Reserve. You owe me $80, Jerome. Also, spread's shifting a little bit. It looks like they're steepening again. Funny enough, the knob spread has been like flat this whole time. Put it in your tax declaration. Yeah, there you go. Actually, I don't know how my tax is going to come out this year. I think at this point I'm probably flat. So because I have had some profits, but I had some losses on the other account. So I think those kind of cancel each other out. Actually, probably it is a loss this year, but it's not very much. And then I think that I can put all of my data fees in as a cost too, right? So I think I can reduce my income a little bit from the trading activity, but it's certainly not going to be as much as like years past. Well, last year I made money, but that was because of the stock trades. And then it'll be interesting. I'm always, to be honest, I'm always a little excited when tax season comes around. I like filling it out, doing it as soon as they'll allow me. And okay, so there was a little bit of a fight there, and then it's resolving to the upside. Oh, and it's actually coming up there quite quickly as well. And the 5-year breaking new highs. Is that a new high? Not quite. Might as well be, though. Okay. So there's some high into the high in the 10-year, and then it got smacked back down. It kind of looks like there's somebody's sitting up there, and they're like, okay, they filled us a little bit now. Market order back. That's kind of what it's doing. I did see a small shift in the 6J as we moved back up towards the highs as well, by the way. I don't know. The overall movement in price is still kind of like, this isn't the best trading. But then when it pops up there to the top, that's like, this is going to go. But maybe that means that it is going to go, but there's not going to be very much in it. And then I'll say that and I won't touch it. And it'll just go and go and go and go. Hold on. We have a baby. It looks like now at this. Oh, there you go. Actually, I was about to say I'm starting to wonder if we won't actually get a very good pop off of this because, you know, we've been waiting for so long. But that was a good pop in the 10-year. The 30-year is still lagging a little bit, but that was a good take in the 10-year. Not enough to help us get new lows in the micros, but it was a good stop run. In the 10-year. It was a good stop run. He's like, a stop run? What's that? What's that, Dad? What's a stop run? Let me show you. Let me show you. See? Right here. Okay. So you see right there, that one? And then all of the buy orders come in above the high. That's a stop run. Oh my gosh. Oh my gosh, Ethan, you're too cute. I just need to shift my career. I am now Mr. Cute. Everything is just cute. I am just the best at having the most cute things. I have the most cute baby. I have the most cute dog. We can find other cute stuff. We can theme the whole YouTube channel around that. He is 6 months old. He was born in June, beginning of June. So I guess that's more like 5 months, but I think I misunderstood my wife because she gave me this thing and was like, okay, watch Asher. So that must mean that she took the baby. That she took Ethan. No, she didn't take Ethan. Ethan was just in the other room and I heard him, so I went and got him. He didn't. He was pretty chill, so I think that he was fine. Like, oh, when something like that happens and we're like, oh, how long were you sitting there calling for us? Now you probably just barely started making noise. Here's S&P 500 is maybe going to make a move. They're breaking out. The volume in the S&P 500 looks really good too, by the way. Oh, you have a one that is the same age. Well, We got the new highs. I think we can end. We've got about 5 minutes, but oh boy. It's interesting to me. Is it interesting to me? I don't feel like that it's just a coincidence that I ended up having 2 boys. We weren't necessarily planning on having this one. And my older one is like, I believe ADHD. He's just like hyper. It was a very, very difficult to raise that kid, I have to say. It was a pain in the butt. So he just is constantly getting into freaking everything and causing whatever kind of mess he can. And it doesn't matter what you say to him or whatever. He just doesn't react. He just does what he wants. But to have 2 boys so close to each other, that's not everybody has that, you know? So they're going to be an interesting duo, aren't they? See, I liked that stop run higher, but like it comes back into the range. It's still being tricksy. They're being nasty, tricksy little treasuries. Treasuries is. Is that how would Golem say treasuries? Treasuries is, I think that's how he would say it. See, like they step back up to the high. This is just, they're being tricky. You think, oh, it's over. They're gonna turn back to, and then they're right back up with that high. Oh, there was actually some aggressive hits there at 31. Yeah, look at that. The bid didn't hold, but that's getting pretty aggressive there. Yeah. I wonder how much legs this has got. Ooh, there's 110. So now 110 is a really even number, right? So there's always going to be a lot of liquidity there. Excuse me. You know what? I had a banana for breakfast, and sometimes when I have a banana, it does weird things. Like, you ever get like that weird, like, I don't know, it changes the chemical composition of your mouth or something? Bananas really do that to me. I need to go brush my teeth. So. Hello. Do we got anything on the above us? I'm a little. Well, there is one at 07. There's a couple of interesting prints above us, but I just so it's been kind of tricky. It's like, oh well, there is some uptrend in here, but it's been kind of tricky. Now on that breach of the highs, it was very aggressive. So I'm wondering if this is shifting from like there's a meta order buy to like now it's out, you know, like everybody knows or something. So it's just yeah, I mean that happens a lot, right? When a lot of really good trends, they start really slow and they're really tricky, and then all of a sudden there's like a breakout at a certain price, and then like it never stops. And because it was so tricky before, you take the profit early, right? And then it ends up being like this absolutely insane trend, and you're like, oh, I should have just held it all day, right? Could be one of those. This is exactly the kind of situation where that would happen too, because like you got to think there's got to be so many people that are like short and overreacted to yesterday's news. And maybe it's just that PMI. Maybe that PMI really is a good sign that the employment report tomorrow is not actually going to be that good. And that could really shift the markets. I mean, if there's 200,000 jobs created on Friday, this market's going to skyrocket, man. It's going to I'm telling you. You got to go. Hey, thanks. You really helped me out. You made a few points that if you were like, oh, Seth, he's being ADHD today. We got to remind him that we got this coming up and this coming up. I appreciate it. And stay here for another few minutes because I want to record as much of this order flow as we can. It is interesting flows. I may have to put you on the ground here. Will you be okay with that? Yeah, you like the floor, don't you? Maybe on the floor. Okay. I am going to shut the stream down, so we'll see you guys for non-farms. Don't miss it. It's probably going to be a really crazy one. Who knows what's going to happen, so see you then. What do we name the stream? Market still reeling from Rugpull. Stay excellent, team.